Core is a high performance blockchain, EVM compatible, that happens to be secured by Bitcoin. And what that means is not just, because Bitcoin is a great asset and it might make sense to align with that asset, but it's because Core was natively built and principally built really to scale Bitcoin in both application functionality. Not that Bitcoin needs functionality from that point of view as a native asset. It's a great store value asset, right? But also it's how do we, invite the Bitcoiners, the hodlers, those that have been in Bitcoin since day one, since the last 10 years, 5 years, or just starting to get into Bitcoin, involved in all of the other possibilities available on blockchain. That's sort of the core chain itself.
Welcome back, everyone. Another episode of Blockmates Orange, and we've got Hong, one of the core contributors from CoreDAO, and also the man behind the steering wheel that is institutional investment and driving, investment from institutions into CoreDAO. And I wanted to get him in today to kind of like just touch on, I think, essentially the importance of this, because I think everyone's kind of like stuck in this, I think, a little bit of a paradigm of, oh, my bags are down and everything's not looking great, and people are actually completely and utterly ignoring the fact that the institutions are in fact here. Yes, we've said it many times before, but you guys need to listen to the moving parts that are currently at play and start considering how you are going to position yourself in this market, knowing that the institutions are very much interested in what's happening out there and specifically what they're doing with Core. And with that very long introduction, Hong, welcome back. It's only been 3 months since we last had you on, but like I said at the start, it feels like a year. I know that you guys have been busy. We do have a lot of clarity around what it is that you guys are doing, but I wanted to just get you in here to give us a blow by blow. So welcome, sir. It's good to see you.
Yeah, thanks, Jedi. Great to be back, and let's get into it. Lots to discuss.
Yeah, I mean, I wanted to just, like I said at the start, what I think is really important is to, just give an overview as to, what this whole Bitcoin and institutions looks like, because people have various ideas in their minds, and I think what would be really useful is to get like a reality check. I know that you're based in kind of like the economic capital of the world, that is New York City, so you're obviously getting it kind of like, from, I would imagine, from a Wall Street perspective, from very much an institutional perspective. So I think your opinion is very much valued. And yeah, tell us what is actually going on out there, in a kind of like a bird's eye view of it.
Yeah, I think Bitcoin is experiencing a true growth period from the moment we've seen ETPs and ETFs with Bitcoin launch. We've entered into this institutionalization of Bitcoin. Not only is Wall Street now able to access Bitcoin in traditional capital markets through ETFs, but you're seeing more participants start to look at what else can they do with Bitcoin, start to maybe dabble in a little bit into Web3 native applications, where Core operates is really in the world of on-chain application building, right? And Core is a high-performance blockchain, EVM compatible, that happens to be secured by Bitcoin. And what that means is not just because Bitcoin is a great asset and it might make sense to align with that asset, but it's because Core was natively built and principally built really to scale Bitcoin in both application functionality. Not that Bitcoin needs functionality from that point of view as a native asset. It's a great store value asset, right? But also it's how do we, invite the Bitcoiners, the hodlers, those that have been in Bitcoin for since day one, since the last 10 years, 5 years, or just starting to get into Bitcoin, involved in all of the other possibilities available on blockchain. That's sort of the core chain itself. And on the other side of it, it's how do you actually allow Bitcoiners to increase capital efficiency in the asset that they love and hold and expect to continue to appreciate in value over time? And not do it in a way that jeopardizes Bitcoin safety, but do it in a way that really enhances the sort of utility and the ethos of Bitcoin through Core, and that's through its Core's consensus mechanism, where we've actually used Bitcoin's native functionality, its own time lock, to append messages that allows Bitcoiners to secure the core blockchain, where additional activity and all the exciting innovations are happening in the EVM application layer, but do it with their Bitcoin and earn rewards at the same time, right? And so those two mechanisms sort of are reflexive on one another. And that's the building block and the foundation that Core is built on. um, that's the foundation that Core is creating, the ingredients for other companies to build on. Um, we've recently announced partnerships with Maple Finance, who joins a long list of institutional partners that are already building on Core to launch LST Bitcoin, which is a native yield-bearing asset that as Bitcoin as a principal asset, but also earns yield. So now anyone with Bitcoin can effectively use LST to earn yield in native Bitcoin or in Core, and continue to use Bitcoin as a collateral asset or as a store of value asset while earning yield. Um, those are just some of the ways that we're moving ahead, that the industry is moving ahead, that we're seeing partners really starting to build real products that drive, that deliver real value to customers, and all of that in just the last 3 months. So certainly lots of exciting things are happening in this space, especially around Bitcoin. And we're very fortunate to be sort of at the epicenter, but also driving much of the innovation and dialogue in the space.
What does a discussion look like with an institution at the moment? I mean, are you sitting in meetings where institutions are coming to you and saying, listen, we're interested in the products that you guys have got out there? What does that discussion look like, and what process are they currently like undergoing? Like, is 1+1 = 2, or is it kind of like this whole kind of like run around? What does that look like?
Yeah, so it ranges. You have institutions who are diehard Bitcoiners that understand everything about Bitcoin, and that sort of shapes their understanding of what is possible and not possible with Bitcoin, all the way to folks that have, you know, really been on the sort of actively participating on in Web3, and understand the full capabilities of DeFi, which means that they're willing to take certain risks and additional risks that you would otherwise not. And what's the beauty of Core is that there's a product and service and entryway, and way to participate across the spectrum of risk and reward, right? For the sort of long-term Bitcoiners, the number one thing that keeps coming up is, what's the risk to my cost basis, right? And so if you've been holding Bitcoin for the last 10 years, the
Yeah.
last thing you want to do is jeopardize the safety of your asset, but more importantly, the pristine cost basis of when you enter Bitcoin. And to the other side of it, which is, you have a number of DeFi native funds or institutions that already are very sophisticated, running strategies on Bitcoin. They don't want to sacrifice the existing strategies that they're already running. So the you come at it from two very different perspectives, but at the core, at the center of it, everyone's looking for capital efficiency on Bitcoin, right? How do I earn more from the asset that I'm hodling that probably is also incurring a bunch of costs, from operational costs to custody fees? Getting any type of yield on those assets in a safe, transparent, scalable way means that you can now turn Bitcoin not only from a risk asset that appreciates to one that is, you know, cash flow yielding, right, or generates positive cash flow, which is a whole nother set of portfolio strategy and asset management and sort of investment strategies that now Bitcoin can be open to. And then the other end of it is what I mentioned around the very sophisticated funds and institutions with large Bitcoin quantities is that they're using Bitcoin as collateral to borrow stablecoins, to run stablecoin strategies like the basis trade, or they're deploying Bitcoin as collateral and trading that as margin on exchanges, right? And in both of those cases, the underlying Bitcoin, while the strategies generate yields and returns, the underlying Bitcoin does nothing. It most likely sits idle. If not, it's being lent out or taking on counterparty risk. So we've identified many of the sort of use cases since our last call. We've identified a lot of the concerns that many of these stakeholders share when it comes to Bitcoin, and we've also gone very much into the market through partnerships with Maple Finance and others to create products that addresses the wide spectrum of use cases with Bitcoin. So I think the long and short of it is, if you're holding Bitcoin, if you're actively deploying Bitcoin in your strategies, you should really be looking at core. There's probably something for you that can enhance what you're already doing without sacrificing security of that asset, the cost basis, and even operationally changing what you're doing today while earning yield.
Yeah, I mean, can you just give us, just for those who aren't aware, and I like to remind people of this very well-known fact, but for some reason people don't realize that they don't have to give up custody of their Bitcoin. They can keep custody, but they can still allow Bitcoin to do the work for them. Just explain to us what that is and how you guys have brought it into your product offering and how people can be rest assured around this.
Yeah, so that's a really good point, right? The misconception around, you have to give up custody of your Bitcoin or take on exogenous risks in order to get something in return for Bitcoin. It's a very valid point. Bitcoin doesn't natively offer yield. It doesn't offer the type of proof of stake capabilities that Ethereum and other proof of stake chains do. And so, how do you really access that? And with Core, it's through a mechanism where Bitcoin actually can be used to secure the Core blockchain through Core's novel consensus. The analogy here is, I've heard this a lot, is everyone knows about hodling Bitcoin, right? You essentially tuck your Bitcoin away and say, we think Bitcoin is going to 1 million or whatever that number is, and I don't want to do anything. What you're effectively doing is you're locking your Bitcoin up, either mentally or physically or through some security mechanism, and you're expecting asset appreciation to help grow your investment or your the value of your Bitcoin. Rich has coined it as the perfect pet rock, and for that reason. What Core uses is very similar. There's actually a native function on the Bitcoin blockchain called check, lock, time, verify that does exactly this. You can issue a transaction on the Bitcoin blockchain that locks your Bitcoin up for a specified amount of time. In that transaction, there's actually a little bit of metadata that you can append without trusting any other third party or external parties. That's what Core uses, is while you time lock your Bitcoin through this CLTV mechanism, you can vote on Core validators and add an EVM wallet address to receive Core rewards. And that's really it. It's as if you lock your Bitcoin away, set a timer, close that lock, and on the outside, you have a little post-it note with that consensus mechanism and reward address. And then what Core does is it actually scans the Bitcoin blockchain, which is public, for these valid messages, and it distributes rewards for Core's validator economics, block rewards plus gas fees, to the wallet address. And that's really it. So if you kind of look at that zoomed out, it just means that Bitcoiners can now do something with their Bitcoin and help to secure this network. That's Core. And then earn rewards, all without having to, give up their private keys, transfer their Bitcoin, put it into any sort of smart contract mechanism. And that is really critical. That's sort of the foundational piece that Core has built is security around that allows Core to effectively remain secure as a network while also providing Bitcoiners rewards or yield. And since the other part we didn't talk about is in addition to Bitcoiners and Core holders being able to sort of participate, stake their assets to earn rewards with Core, Bitcoin miners are doing the same thing, right? When miners are mining new blocks of Bitcoin, they can also participate in Core's consensus in this very mechanism. Today, 3 out of every 4 Bitcoin, newly minted Bitcoin, is participating in securing Core and earning rewards. And in that mechanism, Core also secures Bitcoin in return by ensuring that miners who keep the network, Bitcoin's network, decentralized and secure, continue to earn economic incentives in this way to keep Bitcoin secure long term. So we've kind of looked at this from a bunch of different angles, but at the very kind of center of it is, to your point earlier, it's without giving up security, without giving up access, without changing the cost basis of your Bitcoin, you can now participate in a way that earns rewards for the Bitcoin holders, for Bitcoin miners, and participate in this new vibrant ecosystem of builders building on the core blockchain, right? And so those kind of things are very novel concepts within not just the Bitcoin world, but also within the blockchain world. And we're going to continue to see more use cases develop since Bitcoin is still the largest digital asset. And there's so many permutations and possibilities of applications, financial utility, and different access points and products that can be built on this mechanism.
I can't believe I haven't asked this question, especially being somewhat of a DJ. And if I put my Bitcoin down as collateral with a locking mechanism and I decide to go silly risk and I'll end up getting liquidated, how does that mechanism work if I've borrowed and I can't pay back obviously my commitment to the process of having borrowed? Is it kind of like when when the time lock has ended, the Bitcoin then gets transferred to obviously the individual or the contracts per se that is deserving of it? How does that dynamic work?
Yeah, so in this case, when we're talking about just time locking your Bitcoin, it's not
Yeah.
really used as collateral, right? It's just
Okay.
simply you're locking it to your own wallet, and it's an absolute time lock, meaning the only thing that can change access to your Bitcoin is time itself. Once it's been programmed as a time lock transaction, it's immutable. So if you set a time lock for 24 hours, at the end of that 24 hours, you get your Bitcoin back. If you set the time lock for a year, that Bitcoin is locked for a year, but at the end of the year, you get your Bitcoin back, right? If, even in this mechanism, the beauty of this, and it's worth highlighting that even if something were to happen to core blockchain, right, at the end of that time lock, you get your Bitcoin back. So
Okay.
there's no additional risks that core introduces through this time lock mechanism. And that's how institutions have gotten comfortable, have gotten really excited about now new utility and new use cases that unlocks capital efficiency with their Bitcoin. So that's number one. And then two, you mentioned collateral use cases. Um, so without getting into sort of like credit risk and counterparty risk, imagine, if you can use Bitcoin as collateral, right? Prior, when you use Bitcoin as collateral, you're effectively locking that Bitcoin, but the ownership of that asset is now with potentially a counterparty, or at least you're not really doing anything with that Bitcoin while it's being collateralized. With Core and this, you know, what we call non-custodial Bitcoin staking, or Bitcoin staking for short, mechanism, even while Bitcoin is being collateralized or used as collateral, you can also stake that Bitcoin because it never leaves that particular wallet where the collateral sits. And we've actually seen this use case with Bitcoin lenders and borrowers. When you pledge Bitcoin as collateral to borrow stablecoins, for example, right? You can now participate in earning rewards and effectively offset some of the borrow costs or the interest on the Bitcoin collateral or the stable's interest that you're paying, which again goes towards increasing capital efficiency without introducing any type of exogenous smart contract risks, protocol risks, and things of that sort. So that's really exciting. Hopefully that answers your question.
Yes, it does answer the question, and it's something that we've chatted about a lot, and especially in terms of the content that we've put out there about core. But for some reason, people still land up asking this question over and over again. And I'm sorry that I've asked you to answer it again, because I know that you've probably like discussed this like 1,000,000,000 times, but I think it's just really important that people realize it's actually really simple, and it's quite fundamental in terms of how you guys have designed this product. And yeah, people need to actually just accept that there is no counterparty risk from that perspective.
Yep.
Around institutional interest and obviously appeasing to what their expectations are right now, what are the expectations that institutions are looking for around kind of like the different products that are out there? And that's kind of like being mindful of who you would deem as your competition. Like, why as an institution would I take my Bitcoin out of Coinbase, for argument's sake, um, and put it onto core? Like, what are the dynamics that they're looking for that will actually get them to jump that fence?
Yeah, well, first of all, again, you don't have to take your Bitcoin out of Coinbase to participate in Core, right? The hope is that the custodian actually enables that directly. So the hope is if Coinbase is listening, and we're certainly talking to many folks at Coinbase and other institutions, it's enabling native support and enabling your customers to participate in this time lock securing core to earn rewards directly from their own custody provider or the custody provider itself, right? And in that way, it ensures that if I'm speaking to partners, right, the benefits are very clear. Um, Clients holding Bitcoin or custodying Bitcoin with a third party, such as an institutional custodian or a qualified custodian, um, they keep their Bitcoin there. Number two is they increase the engagement in that Bitcoin, right? Not only is that Bitcoin sitting idle or incurring just fees, you are now offering a service that allows that Bitcoin to participate in securing core to earn rewards. And therefore, that increases engagement, that increases potential revenue opportunities for that partner. And then lastly, you're attracting a new base of customers to your services and products. And it's because the reality is, institutions are smart. They're going to move their Bitcoin or their assets to wherever they can get better returns, right? All while maintaining the same sort of, risk reward or trust assumptions, underlying safety of their principal assets. And so today, we have partners including BitGo and Copper, Hex Trust, Hobo, Cefu, many of the top custodians and wallet providers like Fireblocks that support staking Bitcoin and Core to earn rewards. We're going to see that set further increase. We're likely going to see hardware wallets start to participate in this time lock mechanism to earn rewards, because again, the education piece that you and I are going through right now of, hey, is Bitcoin secure when, or are my clients' Bitcoin secure when they participate in securing core to earn rewards? If the answer is categorically yes, right, then it unblocks and it sort of paves the way for these type of access points to increase in prevalence. So I think number one is access to this way of participating and earning yield on Bitcoin will be ubiquitous to all entry points, both institutional access and custodians, exchanges, etc., as well as retail wallets and exchanges as well. Number two, it's thinking about, okay, so if I'm holding Bitcoin, wherever I'm holding it, non-custodial, hardware wallet, or with a trusted qualified custodian, can I earn yield and participate in mechanisms like with Core to generate rewards? Yes. can I now run active strategies while also getting this type of capital efficiency, right? And with the LST, that answer will also be yes. You can even do some of that today, but with the LST, it's going to be 10 times easier to post Bitcoin as collateral while earning yield. And that's because with Maple as the issuer of the LST and where Bitcoin is secured by custodians, you're effectively trading a Bitcoin product, not swapping or selling or doing anything that incurs a taxable event, but effectively you know lending your Bitcoin to Maple in return for an LST that generates yield. And that LST can be used to, again, borrow stables, could be used to trade margin on exchanges, to run option strategies, right? So more and more, we're going to see Bitcoin as not only a great store value asset, but also as the perfect collateral across so many use cases that institutions already deploy collateral to generate capital efficiency today. And then lastly, I would say it's looking at access to Bitcoin in capital markets. Right today, ETPs or ETFs are the best ways for traditional market participants to get access to Bitcoin without directly buying spot Bitcoin or holding a digital asset. But that product today doesn't generate yield, right? Now, if you have an LST that simplifies access to yield on Bitcoin, that streamlines operational sort of complexities around, staking Bitcoin and Core with Core into a single flow, then it invites issuers, it invites regulators, it invites all sorts of market participants to take a second look at how do they now deploy Bitcoin and how do they do it in a way that is so much more capital efficient, that includes Bitcoin in so many different, vehicles other than, spot positions in a portfolio. So a lot of things I would cover there, but all sort of within the reach of possibilities now. And that's what we're really excited about. That's what the institutional partners that we work with are excited about, and that's what the institutions that are looking at Bitcoin are looking for.
So, I mean, this is it might seem like quite a simple question, but I think it's quite relevant to understand the magnitude of this. And the question is, why Maple Finance? Why is that such an important partner to bring on board? I suppose the answer to the question is obviously like what it is that they do, but they've been doing it for a very long time, right? So I'm just going to let you talk us through that, because I haven't heard anyone ask that question. Everyone kind of just accepts, well, Maple Finance is kind of like a big deal and they know their stuff, but what's actually going on there?
Yeah, Maple's a great partner. Maple's a trusted lender within the institutional, financial world. On chain, they provide stable loans. They provide lend borrow markets, and their team is just very good operators. They're trusted in the space, and for us, this was a really mutual but also natural partnership. Many of our partners that we're looking at dual staking Bitcoin are earning the highest tier of yield, but staking both Bitcoin and Core, wanted to do it in a capital efficient way. And to do that, they were collateralizing Bitcoin to buy Core. Maple was already a natural partner that, provided these type of stable loans. And in many of these conversations, we found that we're talking to the same customers, Bitcoin holders, traders, market makers, capital market participants, and funds that wanted to get yield on Bitcoin. And our expertise in Maple operating their lending products and as the asset manager just made a lot of sense to combine with Core's infrastructure and consensus mechanism that generates yield without all the risks that we talked about, slashing principal risks, to sort of bring to market a trusted product, permission product And for the institutional crowd, it has to be safe, secure, scalable, and built in a way that addresses, the questions that they internally have to answer. They have to answer for their clients. And Maple and Core were already in many of those discussions, have answered all these questions, and have the pedigree behind both our teams and operators to deliver a product that institutions want. So it's been a great partnership. In the last, call it 2 weeks, the amount of interest and demand for LST have completely skyrocketed. Not only that, but Maple's already also launching pre-LST products that take advantage of Core's dual staking mechanism and their expertise in market to bring really simple yield products that sort of check all the boxes that institutions care about in a sort of simplified, packaged, and sort of straightforward offering. And we're going to start to see more and more of that. So it's been a great partnership. Their team is awesome, and we're so ecstatic to point all of our partners and anyone looking at the Bitcoin yield space to Maple.
Yeah. I mean, they kind of like, they, for me, are like the equivalent of Aave from, kind of like an older generation of DeFi user. I mean, they obviously, yeah, they seem to have all the bases covered. I've gone and checked out what it is that they do, and yeah, it's impressive, and it's not just I'm not just saying that for the sake of it. It's like they really are impressive in the way that they approach interface, UI, UX. It's like, yeah, I mean, these guys are on it. How much Bitcoin is currently staked on Core? It's over 5,500, right?
It's I believe it's over 5,500
Okay.
today. But
Today,
that
yeah.
that number changes, and
Yeah, yeah.
and we definitely see that number increasing to tens of thousands in the coming months.
Yeah, yeah. I've heard the goals that you guys have got, and I'm sure you guys are going to get there. Just wanted to get into the specifics of lstBTC, and obviously the dynamic between BTC itself, lstBTC, in kind of like a liquid staking form, and then obviously the dynamic of the core token and how the incentives around that work. Can you give us a breakdown for those who are wanting to understand what that dynamic is, and why it is that you guys are encouraging people to come and stake Bitcoin on the core network?
Yeah, so we talked a lot about how the consensus mechanism on Core works, how dual staking increases yield for Bitcoin holders that want to stake Core. LST is just the next iteration of it that also allows for a very simplified work stream that also allows Bitcoiners to participate in DeFi. And so what lstBTC is a Bitcoin yielding token. It tokenizes the dual staking flow through Maple as the asset manager, and where Bitcoin and the underlying principal assets remain secured by a network of custodians, BitGo, Copper, and others. And that's kind of at the surface really what it is, right? You earn real yield in Bitcoin denominated yield. You post Bitcoin, you get an LSD back, and then you can redeem it and get your principal Bitcoin plus Bitcoin yield back. That's sort of very attractive, different from other products in market, especially LST products that are mainly predicated on points or other sort of future value return type of incentive mechanisms. The second one is that the yield is also built on something that is very transparent, right? It's the headline yield comes from Core's dual staking. And so that whole mechanism means that the Bitcoin yield is real, and it scales as volume scale. That's critically important because the way we operationalize lstBTC for exchanges, for lenders is, what is the LTV sort of number that you assign to lstBTC versus BTC, right? And you want that to be close. You want it to be transparent in yield. More importantly, you have to make sure that the product itself, the way it's structured, creates liquid markets, right? It means that if we talk about a use case like posting LST as collateral, you want to also make sure that that collateral can be liquidated when it needs to into a risk asset, whether it's stables or other assets that's being borrowed against that collateral. And that's really important. And on the LST side, we've made sure that it was built with institutions in mind. So number one, yield is paid in Bitcoin. It's real yield. It's paid off of the headline dual staking yield from core. Number two is Bitcoin is always secure by the custodians. So there's never a flight of capital risk. There's no counterparty risk once the Bitcoin has been lended or swapped or traded for LST or minted for LST. And then the last is that when you think about what are all the use cases for an LST, when you retain asset liquidity in LST form, the last piece is that liquidity is paramount, right? It means that it allows you to effectively take an LST or take this token that earns yield and post it as collateral. It means you can deploy it in these active strategies. It means you can deploy it into DeFi. And while the LST is issued on the core blockchain, it's easily, a multi-chain asset through standard OFTs or OFT partners. And bringing a Bitcoin yielding asset like LST Bitcoin designed with institutions and with sophisticated market participants in mind, it allows Bitcoin now to really have utility not only sitting idle or in at rest, but it now can live in lending pools, in DeFi pools, in applications in core, but also across other native blockchain ecosystems. And that's really exciting and never been done before. And so we're really excited to launch LST, but also start to see these use cases proliferate and see adoption increase.
So, next question has to be, what is that adoption, the expansion and the expansion of adoption look like from your perspective right now? What are the must-haves, the nice-to-haves, and then where are you guys going next? Because I've got to get some kind of alpha out of you. I mean, we can't just educate. We've got to throw a little bit of spice in this.
Yeah, so look, we always build with use cases in mind, right? Today there are a couple $100 billion of Bitcoin posted as collateral. That's collateral used to borrow stables, that's collateral used to trade margin on exchanges. And if we were to replace that Bitcoin that today earns negative carry or incurs a custody cost, for example, with one that earns positive yield through the LST, let's just call it conservatively a 2 to 3% yield on LST. That's an instant $4 to $6 billion in new capital efficiency without having to change the current operational setups, right? And that is real value into today's ecosystem, and that is just with the existing Web2 use cases for Bitcoin. And the first sort of use case for LST will be in Maple itself. And whenever we bring the Maple guys on, they can tell you about all the sort of inner workings when you can now accept an LST Bitcoin that earns yield as collateral, what that can do for the interest borrow cost on stables or interest on stable borrow rates. But take that example and amplify it 10x, right? Because we're now seeing that use case really attract traditional market participants, those that have looked at Bitcoin as a sort of a way to diversify portfolio strategies into one that can now compete with fixed income assets that earn cash flow, right? Similar to treasuries, right? So we're now talking about an entirely new set of asset allocators looking at Bitcoin, um, not just for growth asset returns, but for fixed income yield allocations in their portfolio. So that's just kind of a flavor of what we're seeing. I'm sure there are other use cases that we'll start to see pop up once we start to get momentum in the next few weeks and months.
It's amazing how you core guys don't like to give alpha. Hey, you keep your cards very close to your chest, but that's fine. We know something's cooking, so we'll take it. Just, I think a really important question that I think was on everyone's minds in the previous administration, and people don't really talk about it that much, and that's kind of like the regulatory environment. Even though a lot of really positive things have come to pass in the last 3 to 4 months in terms of who's been appointed as SEC chair and all the rest of it. And I'm really curious as to what are the regulatory challenges right now in terms of the products that you guys, when you sit down and it's like, okay, well, we're going to do fixed income products, we're going to do this, we're going to do that. What are you guys thinking about from a legal regulatory perspective? And then how do you take that rationale and that strategy to the institutions? What are you guys cooking in that department?
Yeah, look, I'm not a lawyer, and so I'll let the lawyers kind of get into the regulatory side. But I am very much familiar, having come from Paxos, on the regulatory sort of frameworks that exist, and we work hand in glove with our partners, right? They
Yeah.
are on the front lines. They understand what the evolving sort of regulatory landscape looks like. On stable coins, you have Stable and Genius and different bills being passed that looks at actually moving a lot of the stablecoin conversations forward in a way that scales both in the U.S. And abroad. For what we're talking about around Bitcoin, a lot of it evolves and revolves around Bitcoin yield, right? It's now that you have ETFs around spot Bitcoin, how can you launch Bitcoin yielding ETFs? And that might happen first in non-US markets like in Europe, but we certainly expect to see that come to the US once there's regulatory clarity, once there's a broader understanding of how some of these yield mechanisms work, and especially with core where there's no principal risk around the underlying Bitcoin when participating to secure core to earn yield, around LST where you're earning yield in native Bitcoin, and where the operationalization of that flow is very, very straightforward with Maple Finance as the asset manager and the issuer for the LST. And so I think the sea change is that there's now broad sort of industry collaboration. Everyone's working together to figure out how do we, generate more capital efficiency? How do we create lanes, and how do we invite market participants to voice their needs? And then how do we solve problem that sort of, you know, increases the public good benefit of digital assets rather than looking at regulations by enforcement. And I think that's just overall very exciting change that we're already starting to see, you know, very positive developments in the market play out. So I think let's see what happens in the next couple months as these bills come to pass, and then hopefully we'll start to see a lot more productivity start to happen in the blockchain space.
Yeah, there seems to be kind of like a general acceptance, which is really cool to see because I mean, even up until 2 years ago, it was kind of like we did feel like we were essentially pushing the boulder up the hill, and I mean, it seems like that's now no longer the issue. Now it's about finding the depth of where this thing can go and the distance, obviously. In terms of the relationships now that are currently in motion, like, is it really about being able to set up a meeting and go and sit down and speak to institutions and regulators and the whole thing, where there is more of a dynamic flow of conversation, or is it still very much, okay, well, we're not sure? Because I remember interviewing a couple of people earlier on in this podcast that looked at institutional investment, and they relayed their experience in like 2016 and 2017, where there was interest from institutions, but people were too scared to talk about it. Is that regulatory clarity, like, has it landed now? And are people like saying, okay, well, it's now normal? It's like we can talk about these products the same way we can talk about, any other product outside of kind of like the crypto space and particularly the Bitcoin space.
Yeah, I think so. I think there's a few more years in price history, a few more years in just comfort level, and now that we have ETFs of Bitcoin, ETH, and other assets come online, there's just general acceptance that this asset's here to stay, or this asset class is here to stay, and the conversations really evolve around problem solving, right? There's XYZ, there's these type of return profiles that we're trying to achieve. Here are the risk concerns. How do we build that together as something that can core help us solve these problems? Those are the type of discussions that we're actively on a day in and day out, and that's across different sort of market participants, different type of user use cases, and so it's exciting to see, and it definitely keeps us busy. But
Cool.
we're going to start to, like any new technology, the conversations will adapt and evolve. But ultimately, I think as long as the foundational pieces are solid, and in which case I think a lot of what we're talking about, that definitely is the case, then we can focus on building, right? It's all about working with the right partners like Maple, working with clients and partners with problems, and who want to be forward thinking, that you kind of create the first sort of iterations of use cases, and then you scale from there. So we're already starting to see that take shape. Like I said, I think this 2025 will be a really exciting year for innovative products, use cases, and sort of new new varieties of blockchain adoption, to start proliferating across different segments. And maybe in the next 3 months we'll be able to share some of that. But certainly a lot's happening, and really fast pace even for blockchain.
Sounds like he's got four aces close to his chest. Um, how long do you think it's going to take before we can see a Michael Saylor strategy on chain? I mean, this is what DeFi has been about. It's about being able to do these kind of things. Do you think we ever see something like that? I mean, obviously liquidity is going to be the biggest challenge, but in terms of that strategy and the way that he's applied it, I'm waiting for someone to do the same thing on chain. Do you think it's going to happen on core? Is that something that you guys have discussed? I'm just curious, like, your thinking behind that.
Yeah, I think we're gonna start to see a lot more of the sort of collateralized capital efficiency plays. I mentioned CoreFi is one that's already happening on
Yeah.
the core chain. It's been announced in partnership with DeFi Technologies. Um, in terms of where are we going to start to see highly leveraged plays start to generate tremendous returns, probably very soon. I
Cool.
think there's never a shortage of folks looking to build and generate returns if there is a way, and so you know I think I think that's probably already happening.
It sounds like you got a straight flush now, so we'll let that be. Yeah, Hong, thanks a lot for, I think, a really like enlightening and educational discussion around what it is that you guys are doing, and more importantly, what the scope of this looks like. We've had some really like in-depth conversations on this podcast around what individual products look like within not only what Core are doing, but just in general, in terms of where this is going from a pure Bitcoin perspective, and now all these products. And what I find really interesting is that it really is a case of the sky's the limit, and whatever you've seen in traditional finance could very well come to pass in a way more efficient and in maybe even a way more robust manner on chain. And it seems like you guys are definitely leading the charge, if not one of the leaders in the space in your respective departments. So I do appreciate that, and yeah, even though I've been doing this for a while and spoken to so many different people, I learned quite a bit today. So thanks for that, and yeah, let's see how you guys keep pushing, because it doesn't seem like you are slowing down anytime soon. Whenever I speak to you, there's always a buzz, and even though you aren't specific about what it is that you guys are doing, the clues are there, and I wish you all the best.
Thanks, Jedi. Always a pleasure. Look forward to the next one.
Cool. Yeah, thanks a lot, man. Yeah, and to everyone who's listening, please like and subscribe. It goes a long way and kind of like gives us a little bit of a reward to keep pushing. And yeah, take it easy. And yeah, we'll see you guys in the next episode. Next episode is going to be an interesting one. I'm going to get all these different stakeholders in the same room, and hopefully we can persuade Hong to come in and kind of help me orchestrate the whole thing. But yeah, stay tuned. We'll let you guys know. Take it easy.
Quick one, nothing here is financial advice. It's for entertainment and educational purposes only. Always do your own research or speak to a financial advisor before making any investment decisions. Like and subscribe.